You know, for the life of me, I don't take a right or left position. I don't know where she gets that 86 million figure, that 86 million will pay more. I assume she's talking in the 10-year horizon. In 5 years, some credits end. So it's possible at that point they pay more than they did on the fourth year. But net, everybody, about 95% will pay less. So the dark cloud for my next guest isn't so who gets what. It's the fact that we can't afford to do any of this. Between tax cuts that we can't pay for and spending that we really can't pay for, we're just digging a deeper hole, and both parties are complicit. David Stockman, Ronald Reagan's former budget director, joins us right now. David, good to see you. Thanks for coming.
Glad to be here.
The president's going to be crowing about those tax cuts, should he?
Absolutely not. He is in the midst of one of the most irresponsible sprees of spending, tax cutting, and borrowing in recorded history. Next year, there is going to be a $1.2 trillion deficit, the 10th year of a recovery, at a point that will exceed any business cycle expansion we've had ever in history. Now, it's bad enough when you have a huge trillion-dollar deficit at the bottom of a recession. But after 10 years of recovery, that's all she wrote. We're heading for the next recession one of these days, and they're piling on the debt in the red ink like there's no tomorrow. This tax cut should have been paid for with spending cuts if you wanted to have it, and they didn't do it. And now, at the same time, we have the Fed finally shutting down the printing press, and they're going to be shrinking their balance sheet. So let me make the number very explicit. The Treasury will be borrowing $1.2 trillion in the coming year. The Fed will be selling bonds at $600 billion in the coming year. Who is going to absorb the $1.8 trillion of new debt that will be flooding into the bond market? We're going to have a collision. The interest rate is heading towards 3% or more. That will totally undermine this phony, fantastic stock market bubble we have. And Trump is making a drastic mistake by embracing the bubble he inherited, the impaired economy he inherited. He should get the playbook of Ronald Reagan out. Ronald Reagan blamed Jimmy Carter for 3 years for the mess he inherited and didn't dare start bragging until 1984 when the economy was back on a solid footing. Trump is walking into a miserable trap that he's going to pay for dearly, and the Republicans.
All right. You know, you so upset people with that briefly our lights all went out. So you could just try to keep it on the right side of, like, somewhat cheery.
Okay.
All right. So now other presidents, and you mentioned Ronald Reagan, they've been loath to sort of pounce on the markets at any given time. It almost spooks them. I guess Reagan was particularly concerned about that. But you know, this president has been saying, look, it's what I've got. The media isn't going to run with it. I might as well run with it. But you said that can actually come back to bite your hiney, right?
Of course. It's a terrible mistake. This is the craziest financial bubble we've ever had. This is a sucker's rally like never before. The stock market is trading at, it was a couple of days ago, at 26 times S&P 500 earnings. Worse, 150 times the Russell 2000. These aren't sustainable. This is crazy. The economy isn't taking off, despite all the rhetoric from the Republicans in the White House.
Well, it's a little stronger. I mean, right?
No, well, Neil, I have to tell you, in the first full year, fourth quarter to fourth quarter, the economy, real GDP, grew at 2.5%. That's the same rate that we've had over the last 4 or 5 years. The problem is we're getting...
Well, you're including the fourth quarter of the year before, right?
No,
or you're not.
I'm starting with the fourth quarter of last year and just going on a year-to-year basis. There were many quarters in 2014 and 2015 where the economy grew 3% on a year-over-year basis. So
you don't think we're seeing any pickup in activity? You don't think we will see any pickup in activity with all these people getting bonuses and extra money in their hot little hands?
No, I don't think so, because, one, all the tax cuts are being borrowed, so it's coming out of one side of the economy and going into another.
Well, what would bug you more, then? If people had to borrow to spend or borrow to get tax cuts?
They're both equally bad when you have a $21 trillion national debt that's heading...
I would concur that, but I think they're a little better when it's money in Americans' hands that they can spend.
Yeah, but it's the wrong decision. 10 years into a business cycle, as I said, this is month 112 to 122. We've never been there before. The longest business expansion in history is 118 months, and that was in the 1990s under far more propitious conditions. So they're asking for a fiscal bloodletting like you've never seen before. When they get a 1.2 trillion deficit at the top of a business expansion, you know, you're going to be.
Let me ask you that. And we got a lot of people when you come on. You know, you obviously generate a good many emails, many favorable, many not. And the ones who don't like it say he's always been a crate banger. He's always Mr. Negative. We could see why Reagan took him out to the woodshed. One guy said he should have beaten the hell out of him. So they don't like it. What do you tell them?
Well, people don't want to hear the truth. They don't want to hear the truth that we're living on borrowed times. Borrowed time. We're living way beyond our means.
What they say, David, is you've been saying this for years. And then they say, well, you're always this Johnny, one note doom and gloomer, you say?
Yeah, I say the Fed made it possible by monetizing trillions of debt, buying all these bonds. That extended the shelf life of this crazy fiscal policy. But the key thing is it's over. The Fed has said we're done. They're shrinking their balance sheet beginning in October. They're going to be shrinking at a $600 billion rate, which means they're dumping bonds into the market. They're not buying the new debt of the Treasury. The market is going to reset. Interest rates are going to soar. The whole stock market.
Soar how much? Soar how much?
Easy to between 3 and 4%, between 300 and 400 basis points.
Wait. We're at 2.7 now on a 10-year note. You see that getting up to 5.74, 6.74?
No, I'm saying it could go to 3% to 4%. A year ago in July, it was 1.3.
I understand that. Yeah, where do you see it going? Back up to
I said
what?
It
to
could
7?
go back up to 3.5% easy, 4%, 4.5%. This market will overshoot.
You'd realize that even then, that's historically low.
It doesn't matter because compared to where the bond market was a year ago,
right?
What that means is that anybody who owns these bonds or own junk bonds that are priced off from it are going to take 20, 30, 40% losses. Now, when you have that much carnage in a $100 trillion global bond market, all bets are off. This bubble is about ready to blow, and if Trump has any sense whatsoever, he would get off this bragging thing and start beating up on Obama and on the Fed for delivering this mess to his doorstep.